The Chinese EV industry is on the verge of a massive inflection point. Both Nio and Xpeng Motors just reported October deliveries, and the numbers will indeed shock you. And the best part is that this is coming in context of a massive rally in Chinese tech stocks, with the Hang Seng index up 6%, closing its highest value since March 2009. As we all know, the stock market creates very rare opportunities for investors to take advantage of so that they can build wealth in the long term. And I certainly think right now is one of those moments in the Chinese auto industry. So let me explain. But as usual guys, before we get into it, make sure to drop me a thumbs up and hit that subscribe button if you haven't already. So to start things off, let's understand exactly how October deliveries for Xpeng and Nio compared to last year, what they show us about the selling pressure in China, and also how the COVID lockdown coming to an end very near you could be the massive catalyst Chinese stocks need to rally into the next bull market. As you can see, if we have a look at year-over-year deliveries for somebody like Xpeng, they were indeed down 50% for the month of October. Now this is obviously a very shocking number, but as usual, I have explained this concept in my past few videos covering Xpeng Motors, and that is that a lot of the demand for Xpeng's cars was indeed pulled forward in 2022, because if you remember, in the first 2 quarters, these guys outperformed every single one of their nearest competitors. In March of 2022, Xpeng witnessed a 202% increase in deliveries year over year, which far outpaced Nio and Li Auto, because those companies were struggling to even increase deliveries as is year over year. And so naturally, customer demand for Xpeng's products is going to wane out into the rest of the year, because obviously the market is cyclical, and it is also driven by the COVID lockdowns and the coming recession in China. But the great thing is that, as we all know, China's going into an expansionary phase in 2023, and the stock market in China right now is literally at a 13-year low. And as we all know, every single time the recovery from a recession occurs, there's a massive expansion in growth and technology. Yes, the COVID-0 lockdowns have played a big role in the decline of profits and deliveries for some of China's EV stocks. But do we really think this is something that's going to be permanent in the Chinese economy? COVID in the US already has become a complete joke. There are 0 lockdowns, 0 masks being played by anybody, and there's very little fear in the US economy about this COVID situation. But obviously China's ahead of us, and as a result, they need to be more cautious with the way that they handle COVID, because obviously their population is higher and their population density is magnitudes bigger than any city in the US. And with the Hang Seng index having put in its worst year since 2008, this is more of an opportunity than a time to sell. And I've been clear about this for the past 6 months. Yes, these stocks have gone down more and more and more every single time that I've been personally buying. But again, nobody can time the bottom of the market. If you expect your prices and investments to go up the time you buy, you are in the wrong business, because at the end of the day, the market is designed to weed out most retail investors, and so your job is to be patient and stay away from what the rest of the crowd is doing. And right now, I see way too much pessimism around China, even though a lot of it is warranted because of the political risks. The valuations are discounting a lot of that already. Let's be honest, this decline in China EV stocks over the past 6 months is most definitely attributed to the decline in the Hang Seng index, which has already been in a bear market well before the S&P 500 did in the US. But obviously, the mainstream media in the US didn't start covering the Hang Seng index until about 2 weeks ago, which is when the index started collapsing over 10% in a matter of a day. And guess what? It turns out a lot of this selling was probably overdone. Nio, for example, just reported over a 100% increase in their October deliveries, which is significantly better than its nearest competitors. Now, obviously, this could be because a lot of their demand was simply not fulfilled early in 2022, which is when they started struggling with a lot of their deliveries. But again, the Chinese EV market is simply cyclical like this. Every EV automaker is going to have its own cycle that it's following for deliveries. It's just a matter of understanding which company can squeeze out the most profits in the future, and as a result, grow the fastest in China's tech race. My personal bets are on Xpeng Motors and Nio, where I believe that these companies will commercialize extremely high value products in the fastest growing EV market in the world, which is obviously China, while also bringing some of the most innovative technology, particularly in artificial intelligence and autonomous driving. If your risk tolerance simply does not have the appetite to deal with the fluctuations that Chinese stocks go with, then please don't invest in China. I am just showing you the research, the conviction that I have built on these businesses over the past 6 months, and why I continue to be an investor despite so much pessimism and fear. Because obviously we know when people are mass panicking, that's when you get the best deals. The best businesses thrive during recessions, and out of the recession is when most of the wealth is built. And China right now is indeed coming out of that recession. And although the mainstream media in the US wants to convince you that China is going to collapse, that is what their job is. Their job is to spread you fear and pessimism so that you can click and read their headlines. That's it. And with the Hang Seng index having reached these levels every single time it bottomed in the past 40 years, it really begs you to ask the question, is this more of an opportunity or is this just another time to panic sell? Because obviously it's been a difficult time to be an investor for the past 1 year, and that has unfortunately weeded out a lot of retail investors out of the Chinese market already. So at some point, the sellers are going to be exhausted and the buyers will indeed start stepping in. And although very rare, there are signs that Wall Street in the US is catching up to the technological innovation that is taking place in China's EV sector, which could be a big threat for sales for other companies in Europe and potentially in America within the next couple of decades. You see, folks are completely misunderstanding what Xi Jinping actually wants. He wants China to become the technological leader in the entire world, because not only is that a way of ensuring security, but it's also a way to beat the United States in being the GDP and engineering hub of the world. And right now, a company like Xpeng Motors is at the cutting edge of this technological innovation. Not only have they recently tested out a flying car, but they also launched China's first autonomous driving vehicle. And guess what? Most US investors simply don't realize that they have a lot of implicit exposure to Chinese equities because all the companies that they invest in do some business in China. So if China is going to actually collapse, then you bet the US is also going to struggle big time. And that iPhone is no longer going to cost you $1,000. It's going to probably be over $2,000 a unit. And right now, all the China EV stocks are pricing in is that China's GDP is not going to go back up and that the economy is on the verge of an imminent collapse under Xi Jinping's rule. But I've already showed you that the leading data shows us China's economy is recovering as their forecast for GDP came in higher than expected, and they recently announced the potential of ending the COVID-0 lockdowns by March of 2023. And it's excessively obvious that the Chinese stock market here in the US is simply driven by emotions. If you guys remember, in 2020 and 2021, all the talk around China was the internet crackdown and the regulation. And then early this year, in March of 2022, when it was announced that China had reached a conclusion with the US auditors, Chinese stocks started rallying like crazy. But now the stocks have all of a sudden hit yet another 52-week low because of a new news catalyst, which is now this massive COVID lockdown and this recession that everybody in the West is focusing on. And so as an investor, you have to keep in mind that there will always be a reason to sell. All you need to make sure is that the reasons to buy are bigger than the reasons to sell, because obviously there's always risk in the markets. And when you have US investors and analysts cut price targets on these stocks from like $27 to $3 in the span of 1 day, you know that there's a big chance of us reaching that capitulation that so many folks have been talking about. But obviously, guys, that is just my opinion on the situation, so let me know your thoughts down in the comment section below.